Well, there goes the bell, and it's a big day and it's a soft start. About 0.1 in the green.
Market is down about 17 points. It's tentative 11,626.
Frontline indices flat. The mid-cap index seeing just some gains for now.
Quite a bit of decline right now, especially on the Bank Nifty, now down about close to 170 points.
On the mid-cap side of the screen, Anuj, mixed trends. The index is going home with a minor cut.
The Monetary Policy Committee cuts repo rates once again by 25 basis points, bringing it to 6%. It keeps its stance neutral despite a steep cut to its inflation estimates. Financials take it on the chin.
The repo rate cut fails to enthuse Dalal Street as the market ends near the day's low. The Nifty slips below the 11,600 mark. Sensex gives up nearly 200 points by close.
Bond yields rise on disappointment that the Reserve Bank maintained its neutral stance despite announcing a rate cut and cuts in inflation estimates. The rupee also weakens on fears of FII inflows tapering.
Interglobe Aviation rallies 5% after sources suggest that Indigo may get between 4 and 5 slots of Jet Airways at the Delhi airport.
And stocks news. Dish TV gains after CNBC-TV18's exclusive story that Singtel and Airtel are set to make a combined offer to acquire promoters' 60% stake in that company. Indiabulls Housing also rallies on growth forecasts of 17 to 19% in FY20. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talkback, the show where we are going to tell you all that happened in those 6 hours of trading. And a lot happened. There were stories of Z and stories of Dish and stories of Jet and the macro monetary policy. We're going to tell you all those stories in 5 headlines. I'm Lata Venkatesh, with me, Prashant Nair.
Lata, hi. And as you said, we will talk about the big stories. We'll take your questions as well. And to answer your questions, we have Prakash Devan in our studios. And on the charts, we have Mitesh Thakkar today. Prakash and Mitesh, thanks very much for joining us here on the show. Before we get to the Q&A and start taking those questions, let's wrap up the day's events for you right from the word go. Lata.
Well, actually, the market was heavy with positions. You know, today we can't blame our fall on anybody. Other markets have a dash of green. Crude is a little lower. We have seen it at 69.80. Now it's, just a little straddling $69. We have no one to blame but ourselves. And what kind of a rally we have seen. From February 20th to today, I counted it was about 35 to 40 trading days. Or let's keep it as 6 weeks. In 6 weeks, it's not 110. The Nifty has risen 1,100 points from 10,600 to 11,760. It's a over 1,100 point rally. And at some point, you're a bit heavy with positions. You've eaten more than you can digest. And there was every reason to take profit. And you got the triggers by the handfuls. You got monsoon worries. You got a policy that is not all that dovish. You have a result season coming up and therefore butterflies in the stomach because of that. Crude prices also rise somewhat. So you had enough reasons. FII selling, yes. 1 day of 1,000 crore is enough to rattle the markets, which are running on FII fuel. So that's what you saw, profit taking. And on a day when IT and banks fall, you must accept that it is a bit of an across-the-board selling. There were some, of course, outliers. Pharma stood out, played a little bit of a defensive role here and there, like the DRLs. Media, because of whatever M&A stories, did somewhat okay. Realty has been doing well. It's showing signs of bottoming out, and a rate cut is always a little bit helpful to this interest rate sensitive sector. But other than that, it was quite clearly a market that was overloaded with long positions and it was shedding some. Now we will have to ask our technical experts what is the support. But more color on specifics?
Yeah, so sectorally, Lata, what did well was media. Z there, a big one. We had pharmaceuticals, which did well, and then autos, which the pullback, it continues in the auto space. Sectoral losers, IT, as a pack sold off, energy was lower and private banks were down and out as well. Nifty losers, TCS, HCL Tech, top of the list really. Then it was followed by BPCL from the oil and gas pack, Hindalco, Yes Bank continues to decline for the second day, and IndusInd Bank, which has again seen such a tremendous move, also came off a little bit. Nifty gains in Indiabulls Housing. We highlighted that, and we'll get to this specific stock in a bit. Z, there was Ultratech, which was higher, Tata Motors, and Bharti, which continues to do better. In the broader space, what was under pressure? And all very large volumes on them today. Vodafone Idea continues to sell off. Reliance Capital, Nagarjuna Construction Company, Reliance Infrastructure. There was Ujjivan, which sold off with large volumes. And there was Repco, which was down about 6.5% once again. What did well? Jet was higher. There was Indigo, which was up 5%. SRF, 4.25% higher. There was Varroc, which has done terribly since it's come to the market. But it was up on volumes. I mean, actually was up 7% at one point, sold off from the highs. Bombay Dyeing and Godrej Properties were some of the other broader market gainers today. Lata.
Okay. Well, with that, let's take it to our guests. First up, what are the charts telling us? Is 11,600 sacrosanct. We closed at 598, 11,598. Mitesh, where do we go from here?
So, Lata, we've been talking about the fact that testing the all-time highs was an event, and then we've kind of gone into consolidation. See, as you were rightly highlighting at the beginning of the show, it's been a big rally. I think we're extremely overbought, run away too far from the moving averages. The intraday charts are now showing tiredness. I think 11,550, 11,750, broadly give and take 20 points should be your range, and you should, for the next 5 to 6 sessions, employ some range trading strategies. Today we did buy on declines around the 11,565 mark, and I think keep a stop below 11,530, and I think on the upside try to sell closer to 11,720, 740 levels.
Okay, we move on to the second story, the second headline of the day. The RBI has kicked off the new financial year with the 25 basis point cut of the repo rate. This was the second successive rate cut, taking the key policy rate to 6% now. 5 out of the 6 members of the panel voted in favour of maintaining a neutral stance as far as the monetary policy goes. Despite a cut in inflation forecast, financials took it on the chin. Nifty Bank ended in the red, dragged lower by Yes Bank and stocks like IndusInd Bank. On the NBFC side, Repco Home Finance was the big casualty, tumbling over 6%. I mean, how does one connect the two, Lata? I mean, in terms of, the rate cut, neutral stance, cut in GDP, lower inflation, but, I mean, the market tumbling.
Well, quite clearly, the market was expecting a more dovish RBI. Maybe only 25 basis, but at least saying that we will accommodate more cuts would have assuaged the market's expectations or lived up to the market's expectations. So quite clearly, it was a disappointed market. Also, as we have been saying, it's a market which is full with positions. The positions were in anticipation of a rate cut. Once the cut came, you have to sell off and take profit. So that was another reason why all the markets, rupee, bond and stocks fell off. The confusion in the policy is exactly where you put your finger. If you have cut inflation estimates by 40 basis points, then is there not scope for at least indicating there is space for one more cut? Okay, don't give 50 basis, but at least say it's an accommodative stance and there could be space developing for more cuts. Throughout the year, FY20, the RBI doesn't expect inflation to go above 3.8. Then where is the rationale to keep the overnight rate at 6? Why can't it come down to 5.75, or at least an indication that by June we'll bring it to 5.75? So that confusion in the policy is fair, and the market perhaps could whine about it. But to be fair to the MPC, ahead of an election, it is more sensible to be cautious than brave. You don't know the colour of the government. You don't know whether it could be so disparate that, you take about 2 months to form the government because people are not able to align. That's not out of the realm of possibility. What will be the shape of the next budget with everyone promising the moon? And what will be the shape of the agricultural season, given the early warning? So in the face of such severe uncertainty, you don't have election uncertainties every day or every year. It's sensible to be cautious. So I would give it to the MPC. They were certainly less dovish than I thought. But mea culpa, I think it was better to be safe than be sorry. And hats off to Governor Das for a very easy and smooth transition from being a North Block executive to a Main Street Mandarin. I think he has done it efficiently.
Okay, and he knows how to handle the questions as well, Lata, right? I mean, that's the other thing. Well, let's listen into RBI Governor Shaktikanta Das on that specific point about inflation outlook as the RBI sees it.
The inflation outlook remaining benign, the RBI will address the challenges to sustain growth of Indian economy while ensuring price stability on an enduring basis in pursuance of its mandate in the Reserve Bank of India Act.
Thank you. Okay. Well, what happened was financials didn't do well, and so we've got a question from financials for our guest, Prakash. Sri Vatsa from Bangalore has written to us with a question on Yes Bank. He's been holding 800 shares at 274 rupees for 2 weeks. So obviously a short-term investor. Then I'll go to Mitesh as well. But even for a short-term investor, give us all views, Prakash.
So I'm not surprised why Yes Bank is part of the question, because this is one bank that had rallied for reasons which were more corrective in terms of its sentiment and not fundamentals. Nothing's changed in the last 2 months except for a change of guard, except for a change of stance. The company's business continues to be, the bank's business continues to be the way it was for years. But that's exactly why it's probably taken a little bit of a harsher cut than some of the other banks which otherwise should have succumbed to bond portfolio impact and things like that. That's not happened. And as you correctly said, what RBI did is what it should have done in the position that it was, those three factors so well encapsulated in terms of deciding their stand. But the market did what it should have done, shed its weight. And this started from Monday. You know, it gave way gradually. It had an intra-sector rotation. Banks gave way to PSU banks, gave way to private banks and NBFCs, HFCs, and today you have everybody flattening. Market in the last 1 hour also did what it feels that the next 3 months or 4 months, you have room for another rate cut. It may not have been defined in terms of timeline because of the uncertainties, but that leaves a lot of room to look for and hope for that. So I think my sense is I would go ahead and buy all my favorite banks, which includes an SBI, which includes Axis if it comes down. Yes Bank also has wings, there's no doubt. My target on this has always been 300 rupees, so it's a matter of conjecture whether you want to buy 250, closer to 250, or you still want to buy 270 and this thing. But hold on to it, 300 is definitely coming.
Okay. But since he says he's short-term, 274, he's sitting on 6 rupee losses per share.
So it won't take too long for that 300 also to happen. Okay. I mean, according to me, that short-term definition could vary, but the next few months, a couple of months also, you would get that 10-12% that he's seeking.
Okay. What's your take, Mitesh? Should he hold on 268 current price, 274 purchase price?
Lata, I have two reasons not to back this trade. One, I think, is that the stock rallied from much lower levels and therefore is now close to extremely overbought tradings on the charts. The other reason is that when the stock was falling with the negative news, it had a big gap down between 320 to about 285 or 287. That was September 2018. And I think around those levels, because a lot of people couldn't sell with the bad news because it opened and then again continued to decline and fell about 20% in the same day. So I think a lot of supply would be pending at these levels. I think these are not the best levels to enter. Even if you can exit with a 5-6 rupee loss, or maybe hold on, try to get close to his price and then exit, I think that will be a good idea. Yes Bank at these levels is not the best trading buy. I think, we do remember recommending the stock when it managed to get past 200 and 220 odd zones, showing momentum on the upside. Now is the time to take profits there.
Okay. I mean, that 20% decline in September that Mitesh is talking about, that is essentially the day when the extension did not come through for Mr. Kapoor. But yeah, I mean, it's starting to get into that zone. We'll see if it succeeds in getting past and filling that gap. The third story for today. Interglobe Aviation rallied 5% in trade. This comes after sources suggest that some of the unused airport parking slots of Jet are being temporarily transferred to other airlines. Indigo is expected to get 4 out of the 5 slots at Delhi Airport, while SpiceJet may actually get between 6 and 7 slots. We go to question, Lata.
Yeah, Deepak Gupta has written to us from Delhi. His question is on Interglobe Aviation. He has been holding 140 shares of the company, purchased at 765 rupees a share since the IPO. Long-term investor obviously wants to know if he should hold or sell. Oh, yes. He is a long-term investor. What would you tell him?
I would continue holding with that long-term orientation, especially because the stock still has literally and figuratively wind beneath its wings, for the simple reason that this quarter numbers could probably be a very significant departure from what we've seen in the last 2 quarters, where yields have been under pressure, the costs have bloated. You had softer crude, higher tariffs. I mean, they could hike prices in January, and you have very good PLFs also expected thanks to the issues that Jet and Spice had to grapple with. So at least till the time numbers are announced, which is first week of May is when I'm expecting Interglobe to announce its quarterly earnings. If you want to book profits, and by that time it could be about 1530, 1540. So another $100 is waiting to be made, and he should reward himself with that patience.
Okay. Well, so if you're not in need of money, don't go ahead and sell now. You may get more.
Just wanted to get a quick sense from Mitesh as well. Mitesh, what would you say? Interglobe? I mean, you know, it's basically got a range of 750 on the lower end since it's listed to about 1400 on the higher side. It's at 1430 now.
Yeah, Prashant, actually, now is the time when it's showing signs of a possible breakout on the upside above that range. You're right to identify the levels. The highest weekly closing we got was 1503, but on the monthly charts, we've never had a closing above 1425, 1430 zones. And you're right there. I think the signs are good. I think 1500, yes, will be some kind of a level where some supply would be or profit booking will take place. But I think eventually the monthly charts show a possible breakout, and that could lead to targets of close to about 1750 to about 1800.
Okay. All right, gentlemen, both of you on the same page, asking him to hold on. On that positive note, we are going to take a break and also get you some opinion. We spoke to Rob Subbaraman of Nomura earlier today, and an ace watcher of Indian economy and markets. Here's his view. We are coming back.
If I'm thinking firstly about the economy, it's clearly slowing down. And I'd say the thing that we're quite focused on is the fallout from what's happened in the financial sector, particularly the non-bank financial corporations. Yeah, and the drying up of credit to the weaker small medium enterprises and property developers. So we think that is weighing on the economy. We think election uncertainty is weighing on the economy. And we're seeing, durable consumption and even discretionary starting to weaken now. Looking at the polls, I think the BJP coalition is starting to gain some traction again. And we think that, assuming they do get through, you will see investment starting to pick up.